Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, will provide you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Hello, and thanks for tuning in. Welcome to Real Estate 360 program, your number one source for all of your real estate needs and education. Welcome back. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom Wilson, your host for the Wednesday edition of Real Estate 360 that comes to you daily, Monday through Friday at 3 p.m., along with co-hosts Joe Kuchera and Lori Graymont. Please don't tune in each day and don't miss their programs either. If you can't make the live show, you can catch our podcast on RE360Radio.com and my programs on TomWilsonProperties.com or on iTunes. We have a great program for you today with our in-studio guest, Richard Crouch, to talk about the real estate market and what you should do about it. And at the end of the program, I'll give you Tom's top tip of the day. So, welcome, Richard. We've got returning guest Richard Crouch, financial services professional with Transamerica Financial Group. Richard's a veteran of Silicon Valley entrepreneur who specializes in financial advisory services and is a top-producing residential real estate agent with Alon Pinnell in Silicon Valley in the Bay Area.
Tom, it's great to be here. Thank you.
You're very welcome. You used your high-tech background over all the years in high-tech that we kind of shared together, like I did, to kind of figure out how to make the most of real estate. It's been a great transition. There are a lot of us techies that find real estate's a really great avenue to take our analytical skills from and to, isn't it?
It is indeed, and it's also a great field to be in after having a successful high-tech career and being able to take all the things you learned during that time.
Well, we're going to talk today about what's going on in this crazy marketplace. What a roller coaster this has been over the past decade, and you really have to stay tuned. Certainly a nice thing I think about real estate is that it doesn't move as fast as a securities market or other commodities, but when you're as dynamic as we've been in recent years, you do have to watch what's going on and be ready to adjust to it. I always love the analogy of how Sizzler was one of the few survivors back in the about 3 decades ago when everybody started going for healthy food, and most of the steakhouses died, and they were smart enough to add a salad bar, and they're still around today. So I think everybody's got to be ready to add that salad bar and steer the ship in the direction that the market's going to capitalize on it. So we're just give us a little update on what's kind of going on in the U.S. market, and then we will move from there on to a little bit more local here in the Bay Area, but we want to give enough generalized information for all of the listeners who are not here in the immediate Northern Cal area that you can apply what we're hearing today to what's going on in your immediate neighborhood too. So what can you tell us about the general trends? I mean, we hear on the news a lot about no inventory, but other than that, most people, I think, can't quite figure out what's going on or why.
Well, I think one of the first things that might be surprising to a lot of people, we sort of have a tendency to look at our home turf, Bay Area, Silicon Valley, and know how fortunate we are to live in this particular area from an economic point of view. But a lot of people think that the rest of the country is really lagging behind and may be in trouble and not able to get out of trouble. But in reality, this recovery in real estate right now, it's broad-based. It is the entire country. And for example, home sales, as of April 4th, we're up 5.5% from 1 year ago and up 9.1 cents from 3 years ago.
Now, was that volume or price?
That was
Richard.
That's sales. actual volume of sales.
Volume of sales, yeah.
Then the prices for changed from 1 year ago, 13.5%, and from 3 years ago, 7.8%. So it's a robust shift in a positive direction across the entire country. Interestingly enough, since many of our listeners are probably from different places in the country, relative to 2007, I'm just going to start in the Northeast with Boston. Prices are 11.6% still off of what they were in 2007, but only 11% down.
So these
now.
are numbers that are how much we're still down from what the peak was.
Exactly.
So
then,
for those that think maybe we're just in euphoria here of the problems are all over, we still got some room to go. Right?
Well, after we get to the West Coast, you'll understand why a lot of it is euphoria, and we have to be careful. But so down, Boston down 11.6%, New York 25.8%. From the top, Baltimore 15.7% down, Charlotte minus 10.9%, Atlanta 33.3%, Nashville minus 1.9%. Might have something to do with the fact that I grew up there. I'm not sure what. And then in Florida, Tampa minus 45%, one of the hardest hit areas, Miami minus 50%, and Orlando minus 53.6%. So South Florida is definitely has the most trouble in this regard in recovering. And
I was just in Florida after a conference and looking at real estate there, and they're very pleased to see that it's up off the bottom, but it's got a long ways to go.
Yes, it does. And then if you move on into the Midwest, Cleveland might argue we're not Midwest, but minus 16.1%, Detroit minus 29%, Chicago minus 30%. St. Louis minus 1.8%. Something going on in Tennessee and Missouri here that is a bit of a surprise. And then Minnesota minus 31%.
Now, how are we doing in Texas?
Hey, Texas.
One of my favorite states.
Well, you got two green circles in that state, which means that in both San Antonio and Houston, the numbers are up above what they were in 2007. 2% higher in San Antonio, 1.6% higher in Houston. Dallas is lagging 11.9%. So clearly the San Antonio and Houston markets, especially I think the oil industry is stronger there.
One thing that could be a difference is I just looked at the Case-Shiller numbers, and it showed Dallas as the lowest drop of any city in the United States, and it showed like 3% from the peak is where it's sitting as of fourth quarter 2012. But it may be that, of course, Case-Shiller tracks the same properties, where this maybe is median based, and of course, whatever price bracket is selling kind of affects those numbers a little bit.
Yeah, I mean, if you're minus 11.9% down from what is already a low number, in other words, your drop was not that big. We know that in Texas and Dallas, it's not as significant than if you're talking about a much bigger number. 11% of a much bigger number is obviously a much bigger drop. So then if you move into Denver, positive, 5.4%. Denver has really recovered. Into the Southwest, Phoenix, minus 45.6%. They were the biggest in terms of the downturn. They are rebounding. San Diego, minus 36%. And then Las Vegas, minus 57%. A real tough go there. Los Angeles, minus 41.8%. San Francisco, minus 41.8%. Portland, minus 21.1%. And Seattle, minus 25.5%. Overall, USA composite, minus 27.5% from the high of 2007.
And this is very recent data, isn't it?
This is March. This is as of March 29th.
Mm-hmm.
Yep.
Okay.
Now, one would sort of guess that with this rebound that we've probably added some jobs. In the Bay Area, in 2012, we've added 91,400 jobs. Best annual gain since the year 2000. In the Bay Area, 40% of the added jobs, 40% of the jobs were created in the past year. Okay. Bay Area is expanding at a much higher percentage than the rest of California. Specifically in the Bay Area, 29,000 jobs added in South Bay, 31,000 in San Francisco, San Mateo, and Marin, and 21,000 in the East Bay. For an overall increase, as I said, of 91,400. There's a few other communities that are not in one of those three.
And indeed, it's amazing that 40% of all the California jobs that were added were here in the Bay Area.
Exactly. Now, on San Francisco Bay Area, by county, sales volume, median price, Alameda, minus 3.3%, February 12 versus February of 13. Median price is plus 26.1%. So a big jump in price. Volume itself is down just a tad, but a big jump in price. Contra Costa, minus 1.7% in volume, plus 32.3% in median price. Marin, down 1% in volume, up 21.4% in median price. Napa, down 11.7%, up 29.7%. Santa Clara, down 9.5% in volume, up 28.2% in median price. San Francisco, down 13% in volume, up 12.3% in price. San Mateo, down 16.5% in volume, up 28.9% in price. Solano, down 8.3%, and up 24.6%. And finally, Sonoma is up 6.6% in volume and up 16.9% in price. So that's the Bay Area.
So lots been going on in the past, and that's all past year, right? Is that 12 months or is that 2012?
This is all 2012 over 2013. February.
You mean, okay.
February.
Year
over year, February.
Okay.
Yep.
Good.
Okay.
Right.
So one other thing that I don't know how much time we have in this segment, but I want to talk about when we come back some of the wild and crazy things that are happening in the bidding wars.
Okay. Got any other stat to throw at us here before we close out this segment? We've got the Bay Area movement. What do you have there?
Days on market in Santa Clara County is kind of interesting. It's dropped 51%, which is very significant. And inventory, correspondingly, is only about a month, where 5 months is normal. So that's impacting how we buy and sell.
Okay. Well, we'll be back in just a couple of moments here, and we'll get into some more details about what's going on here locally. This is Tom Wilson on KDOW AM 1220.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to the Real Estate 360 program, where today we have guest Richard Crouch, a expert in the real estate market in the general area and in the past high-tech entrepreneur. Richard, we're talking about the local market, what the trends are, what's happening. Give us some more information, if you will.
Well, I would like to give you a little bit of information here about what's happening in Santa Clara County, Silicon Valley more specifically, which, of course, from a job growth point of view is the biggest engine we've got in California. And some of the absolutely incredible things that are happening right now with people trying to purchase real estate in a market which is very, very slim on inventory. And probably one of the areas that stand out are Cupertino, Sunnyvale. There's even a couple of cases in Mountain View and Los Altos. Let me just give you a sense of this. And what this all has to do with really is if you are going to try to buy a house right now, you are going to be competing with other buyers just by nature of the fact the demand is vastly greater than the supply. So I'm going to give you now a few statistics from some actual sales that just took place in the last week in several of cities to give you a sense of things. There was a property on North Blaney in Cupertino listed at $1,588,888 and sold for $1,738,000.
Amazing.
with 8 offers. Another one in Cupertino and Flora Vista, listed at 1,428, sold at 1,550. Moving on to Sunnyvale, one listed on Bedford in Sunnyvale, $998,000 was listed. 66 offers.
66.
Selling price $1,451,000. $453,000 over asking, which is a 50% increase. Incredible. Another one on Gale in Sunnyvale, list price $798,000, sold for $960,000. Another one in Sunnyvale, Partridge, $895,000, 14 offers, sold for $1,120,000. Moving on to Saratoga, one listed at $1,678,000, sold at $1,870,000 with 7 offers. McCulloch in Saratoga, listed at $750,000, 25 offers, $750,000 list. It's sold for $1,200,000.
And some of these areas, like Cupertino you're mentioning, are certainly very nice areas, but they aren't places that you would normally expect those kinds of prices, like maybe more like Palo Alto or Woodside, or
especially Sunnyvale.
Yep.
I mean, this is a big surprise, and so it tells you that the reach of Silicon Valley and the companies is moving into Santa Clara, Sunnyvale, and these areas, reestablishing jobs that were lost when the manufacturing sector went overseas 10, 15, 20 years ago.
Now, years ago, a town like Campbell was kind of a pass-through town on the way up the peninsula, and these days it's a wonderful go-to place. Our company just finished putting on the market a property we had been worked on for 15 months, 3,000 square feet, and we the first weekend we put it on the market for $1.6 million, and in the first week we had 200 people come through and had 3 offers on it, so it's under contract.
Yeah, absolutely. And we've also got Mountain View, for example, 7 offers only at a $1.398 list price, sold for $1,701,000.
Pretty amazing.
Almost $400,000 over. Valley Square in San Jose. So are we including San Jose here? Listed at $749,000, $888,000, 20 offers, sold for $850,000, all cash with 2 months of free rent back.
And these multiple offers, I'd say, kind of started about a year ago.
Yeah, I'd say
strength.
more like 6 months, really.
Mm-hmm.
Yeah, mm-hmm. I mean, things really started taking off. We could see it coming in the early fall. Another area of San Jose that had been lagging, Willow Glen, home that listed at $799,000, 11 offers, sold at $905,000.
Mm-hmm. Now,
just a year ago, I sold a house in Willow Glen, and in April of 2012, I sold it for $1,070,000. It had been as low as $850,000 in the downturn, and I only got 1 offer, all cash, albeit, but 1 offer.
Again, markets that may not change the next day, like in the stock market, but within 90 days you can be in a different market. And I think a very important thing for the listeners to recognize is that you can look at medians and averages in a particular region, but the submarkets can vary tremendously, and different price groups within the same submarket can vary tremendously. So you really, really have to be very careful when you are getting ready to buy or sell in a particular submarket. You've got to really figure out what's going on there and get an expert to help you with that. So this is Real Estate 360, AM 1220 KDOW, and we'll be back here in just a couple moments, and we will continue with Richard Crouch and figure out what we do to take advantage of this.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to the Real Estate 360 program, where we have today our guest, Richard Crouch, talking about what's going on in the marketplace in general in the country, and especially here in the Bay Area. And we're going to, I think, move a little bit into what do we do about it? Should you be a buyer or seller? And was there a stat or something you wanted to mention before we got into that segment, Richard?
Actually, back to talking about these multiple offer situations, just the fact is that it's also true in the other Bay Area counties. We don't have the data. We do have agents that have collected data in the South Bay, so that's the reason we didn't mention some of the others. Mm-hmm. But it's phenomenal throughout the Bay Area. And
in general, from talking to people around the country, it's not happening to this degree in all areas, but most areas are certainly lacking from inventory.
That's right.
And they are, the area where we deal with a lot, Dallas-Fort Worth, supplying rental products to our clients from there. It's we're having a very difficult time finding good quality product. You can still get some poor products, even that's tougher. But we're doing 50 to 100 offers to try to get one good product.
Yeah, exactly. I mean, in most parts of the country, supply is dropping like a rock.
Mm-hmm. And let's talk about why that is.
Well, the reason that is because people who are in their homes sense that there are better times ahead, and that if they hold out longer, they're going to get a higher price. And some people, that's dangerous because they probably need to get out from under the responsibility of the mortgage, especially if they were short in the past. And now they have equity, and they're thinking, gee, do I sell it now so I don't have to worry about it falling back to negative equity, or do I wait so I can make some money? That's a tough call. A lot of it has to do with the individual, of course. But sellers right now need to take advantage of the fact that we have less than a month of inventory. And what that means is record increases in price, and all of these properties are selling in 7 to 9 days. Okay?
I love a quote by the grandson of the Lafitte Rothschild family, which at one time was the wealthiest family in the world in Europe, was once asked to what single thing did he attribute his family's great wealth, and he said by selling too soon. So the point was don't be too greedy and try to get the exact top or bottom of a market. If you see a good situation, then walk through that opportunity door and don't worry about maybe leaving a little bit on the table, because you might miss that window altogether. Right?
Yeah, and you know how one saying begs the other, leads me to say also, a bird in hand is worth two in the bush, okay?
Indeed.
And the reality, sellers really don't know what's going to happen beginning after the summer or fall of next year. Any number of things could happen globally, which are, in these day and age, we're affected by that. Go back 10, 15 years ago, it didn't really matter what was happening globally. Now our planet has shrunk, and it makes a big difference. So we have to be aware of that.
It's great. It's great having you with us here to kind of bring in the perspective of the owner-occupant. I focus so much on the investor and investment marketplace, and I think in terms of that. But your comment about buyers or sellers worrying about missing, an opportunity to sell for more later is certainly a good point, and they should be careful about that. Certainly in the foreclosure arena, which affects more investors. We got the situation where the banks are still constraining the release at a very, very strong amount in order to protect their balance sheets. So that has really dried up in combination with the hedge funds now that are going around the country buying up product at prices sometimes which are greater than what a small investor is willing to pay.
Yeah. So going back to the banks, a great example here. One of the top 5 banks, I won't mention specifically who, is rolling out a program whereby all homes that previously might have been considered foreclosures will be sold in a short sale. And we're talking big volume. They're recruiting realtors as we speak to represent these different people that need help. And I think it's a great thing, actually.
Okay, so we'll be back in just a minute to continue on that subject. This is Real Estate 360.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to the Wall Street Business Network here on 1220 AM KDOW, Real Estate 360. We have today our special guest, Richard Crouch, talking about what's going on in the marketplace and how to deal with it. So, Richard, just before the break there, we were talking about why people should take advantage of this window of opportunity as a seller, because you don't know how long this is going to keep going on. There's low inventory. The supply-demand ratio is such that in many areas of the country, including here in the Bay Area, we're getting multiple offers, and you never know how long that's going to last.
Exactly. And there's one more category reason for why they should be selling, and that is new construction is becoming a more and more competitive force in our market as well as everywhere in the country. New home sales up 19% year over year. And so if you're a seller and you're selling a house that hasn't been updated, for example, or even if it has been, you are going to be competing with new homes. Less of an issue in the Bay Area because we have so little land that there's just not only so much they can build, right?
But many parts of the country, it's a significant factor.
Right.
I know they're starting to build again in areas of Texas.
And then before moving on to what financial reasons for buyers, I just want one more thing to leave in everybody's minds of understanding inventory. 1 to 4 months of supply, and we are less than 1 month right now, creates a seller's market where there's not enough homes to satisfy buyer demand. Appreciation is guaranteed. 5 to 6 months supply creates a balanced market. Historically, home values appreciate at a rate a little bit greater than inflation, which on average is 3.5% per year. And then finally, a 7 to 8 month supply creates a buyer's market where the number of homes for sale exceeds the demand. Depreciation follows. So you just keep those things in mind, and it'll help you understand.
Good rule of thumb numbers there to keep in mind. So we're in an exceptional market situation, and it's hard to tell how long it'll last.
Exactly.
Why should a buyer buy now? It's a tough market.
You know, it is a tough market, and that's because a lot of people just don't have the constitution to go through competing and bidding wars to buy homes. But what penalty do you pay if you don't do that? So, first of all, every week that you have a market where home prices are being bid up, the next week they're that much more expensive. And so for a buyer to, if they have to go through 10 houses to get to one because they weren't aggressive enough in the beginning, they're paying a huge penalty, a lot more money. It's going to cost them a lot more money. So you really got to understand that you have to be aggressive and do the best that you can, and make sure to do that. You have to know what your capability is financially. You got to make sure you have it pre-approved so you know exactly what neighborhoods you can go into, and the fact that you're going to be you have a financing that is strong, will look strong to the sellers, and many times you have to compete with all cash offers, which is tough.
And you got to have the mental constitution, as you mentioned, to do that. But I think it's probably just as important, if not more, to have a real estate expert who's representing you who also has the constitution to do that and knows how to deal with that market.
You know, you really do. It's not really a plug for realtors, let me tell you, but I can certainly say this, that as a listing agent, when you're selling a house and you've got 30 offers, okay, how do you sort through those 30? Well, you can usually drop out 60% of them and pick the top 5 to 10, for example. Then you have to figure out of those 5 to 10, you have to rate them, and what's the risk that any one of those can close escrow. And then you have to, once you've done that, then you're down to maybe 2 or 3, and that's when the listing agent and the selling agent start communicating with each other, trying to figure out. The listing agent's job is to get the most possible money, his fiduciary responsibility for the seller. The buyer's agent is often referred to as a selling agent. They're, of course, trying to buy the house for as little as possible. So what happens at the end there, it's a negotiation, frankly, between two realtors representing a buyer and a seller, and maneuvering to a final decision on which offer gives the best overall result for the seller. And the buyer, the best overall result, of course, is he gets the house, right? So that's the way it works. And you have no chance without a realtor.
And there's And there's a trade-off between, when you're sorting through those between price versus terms.
That's exactly right.
So, having really strong terms going in this day and age, it's almost mandatory to have no appraisal contingency because appraisals always look to the rear. And if the market's going up fast, then appraisals usually don't keep up with it. So a smart buyer, I think, will put in, as his agent will recommend that he puts in a no appraisal contingency, and the buyer is willing to put up extra money if needed between the loan amount and what the purchase amount is.
Yeah, we just had one of those where the appraised price came in at $620, the sale price was $640. We had to get a reappraisal. We got it up to $630, but still the buyer had to chip in some extra money. Another example is where we had 15 offers on a house, which was in Willow Glen. And the two buyers emerged as the two real strongest buyers, which were all cash. One of them had come here from Japan. Their money was in Japan. The other one, their money was here. Otherwise, they were identical. They had the same potential for being great and closing on time. Well, the ones whose money was in Japan lost. Mm-hmm. Because, you can't be that confident. How's that money going to get from Japan to here? Yep. So anyone who's here and is buying here, and if you're a foreign national, you need to keep that in mind. You need your money here in order to be able to compete.
And if you're in that situation, you better come up with some reason for them to pick you instead of the one that has all cash and no contingencies, such as a much higher price.
Right.
But a very strong way to go is to have very solid potential to close in the eyes of the seller. And that way you can have a price that's maybe not quite as much above market as it might be otherwise.
Right. And the other thing, in addition to rising prices, which is why somebody should sell, is interest rates are increasing and rents are skyrocketing. Those three reasons is why a buyer should be buying now. Because if they delay, they're going to get hit multiple times with higher prices.
Okay, well, we'll come back after the last segment and wrap up some closing points. This is Real Estate 360, KDOW AM 1220, and the Wall Street Business Network. We'll have you back with us in just a few minutes.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to Real Estate 360, where we have our special guest today, Richard Crouch, talking about the marketplace and how to deal with it, which is a tough thing these days. But if you don't, you're going to miss out some opportunities. So Richard, what other items do you have here to tell us for recommendations on buyers and sellers, how to deal with this market? Okay,
well, given the fact that the inventory is so low, it's a tough road to hoe. But why should buyers not let that stop them? Basically, rents are skyrocketing. That's one reason. It is actually now more expensive to rent than it is to own a home. Okay?
In many areas.
In many areas. And then the second thing is that interest rates, as the economy heats up, interest rates are going to go up and inflation goes up, which means everything's going to cost more, including homes and other things that we depend upon every day. And the only way you can get ahead of that is to have some way of getting into real estate where you can get a return on your investment over a longer period that's going to exceed that of inflation, okay? There are the other categories of investments you can make to do the same thing, but real estate is the one that we all know the best and probably feel the most comfortable with.
And you just got to lock in these low rates. There'll be an opportunity that we'll probably never see again in our lifetime.
Perfect. I mean, it's unbelievable. I know rates as low as 2.1% for a 5-year loan, interest only. You can also do 7 and 10 years. You can get a 30-year mortgage for less than 3%, sometimes even just a tad over 3%. So the opportunity for that, you're absolutely correct. Okay, then I just wanted to mention one thing, because this question everybody's probably asking: will the economic uncertainty that we all have to know is present derail the real estate momentum that we're experiencing? According to Bank of America and Merrill Lynch, we believe that the gain in home prices can persist despite subpar economic growth this year. Absent a significant weakening in the economy with negative payrolls, we think the housing recovery can continue. Also, the National Association for Business Economics was recently quoted as saying, while gross domestic product is expected to be negatively impacted by all of the uncertainty surrounding the nation's impending debt ceiling debate and the risk of sequestration, the housing sector is expected to continue its upward trajectory. So there. In case you were just doomsday and you said, no, I'm not going to do anything.
Richard, how can folks get hold of you here if they want some more information?
Well, my email address is probably the easiest. It's R for Richard Crouch, Crouch, at APR. That's AlonPennellRealtors.com. And in closing, one last thing really quick. 6 key considerations when applying for a mortgage. Build a strong credit score. Know your loan options. Consider making a larger down payment. Keep an eye on fees. Wait for a good deal. And comparison shop. It's all yours, Tom.
Thanks, Richard. Thanks for being with us today. My top tip of the day is don't reinvent the wheel. Get your own expert team. And that goes whether it's for buying or selling, in particular, your own home, or if that's for investment property. Listen to us every day on Real Estate 360. Richard Crouch will be with us next week to talk about reasons to consider investing in real estate now. Glad to have you with us, and we would like you to tune in every day at 3 p.m. My co-host Joe Kuchera and Laurie Graymont are on other days. I'm your host every Wednesday. And remember, you can also go to RE360 Radio.com for a podcast, and you can go to TomWilsonProperties.com for information from me, and also podcasts and on iTunes. Wonderful having you with us. We look forward to having you back next week.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. AM 1220 KDOW.